Hello, it is Monday the 10th of March. We are heading into Asian trading, and it's been a really brutal day, to be honest, after a really brutal week. Absolutely no kind of relief bounce and no kind of mutual fund Monday, and here we are back testing kind of really important levels in a lot of markets, and in a lot of markets we've lost those levels. If we take a look at last week and which sectors kind of outperformed, to be honest, Bitcoin, as usual, is holding up. Well, it feels pretty brutal, held up pretty much better than anything else in crypto land. Meme coins were the hardest hit. This is what they are down so far on the year, 64% on this year. We're only in the beginning of March. And AI and gaming are down just as bad. But last week, the biggest loser for me was Solana, which was quite a shocker. And the most shorted crypto, which is ETH, of course. If we look at ETH in this big 2000 level, ETH is now down 50% from the December highs, and big round numbers like 2000 are a really big deal for ETH. We'll talk about the potential pattern in that one. So that's where we are, and this is how today's going. You can see we are underneath that 2000 level again in ETH, and not doing very well. This is the positioning in the CME futures and in the ETH. This is ETH positioning. It's the biggest short ever. In Bitcoin particularly, a lot of big institutional investors are not positionally positioned. They tend to be short the futures because you get a price premium, and they tend to be long in the options or in MicroStrategy, but ETH has definitely been open shorted, and luckily has not been the worst performer. What I really like to see about extreme positioning like this is when it does bottom eventually, and when it does turn, all of those short positions are covered, and it's like rocket fuel for this to go higher. And they say, you know, bear market rallies can be really fierce, and they can be really fierce, and this kind of positioning leads to those kind of rip your face off moves when they turn. So we'll be watching out for that in ETH. In terms of fear and greed, the beginning of last week, not the weekend just gone, but a week ago, 10 days ago, we were at a really important support level for Bitcoin, and I was expecting it to have a really decent bounce and an attempt to get back to 100,000. It only made it to 90,000. But, you know, we had a lot of really good technical levels when we look at Bitcoin. But what we were missing a week ago was that kind of really extreme bearish sentiment where the very last bulls were throwing in the towel. And the more we have these really nasty shakeout days like today, and this has been a really quite brutal one, you know, we haven't seen a day like today since 2022. We certainly haven't seen a day like today since 2022 in stock markets, and a whole bunch of other things, you know, we've got going on in terms of stresses. I really going to try and not get into politics today, but there are a lot of reasons in terms of sentiment where we could find a kind of washout bottom soon. The most interesting thing for me happening this week is the lunar eclipse on late Thursday night, early Friday morning. We remember the really nasty sell-off that we had in crypto in 2022. That bottomed on a eclipse. And so we have two eclipses this month, the one on Friday and then one at the end of the month. And so, you know, quite often lunar eclipses like this, we see endings. It marked exactly the end of the bear market in 2022. So we can hope perhaps this week, I've got another picture of this, that's what's happening. So let's talk about where we are first of all in Bitcoin. I'm going to go out to the weekly, and we're going to talk about why this is a really big level. I explained in my video last week that, you know, each one of these swings has held 50% as really important support levels. And this swing here, this five wave swing, for example, from the lows in 2023, pull back exactly 50% and keep kept going higher, and here we are. If we measure from the August the 5th low, when pretty much everything made a bottom in all of these markets, here we are testing this big deal 50% level, 79,285. If I put in our moving averages and we go down to the daily, you can see we're also here at one of those daily 200 moving average. So we've got, which we didn't have when we bounced last week, we have got really nasty poor sentiment testing this level, and potentially a little bit of a double bottom swing failure pattern. When we look at this, and what I'm hoping it would be this potentially is we see 3 waves up, 3 waves back, and this one unfolded, you know, in 5 waves. I think there's a potential that we get a bounce from here, but I'm not tempting fate, and I really would like to see us start to flip some of these lower time frame moving averages this week, which we haven't done yet, for a bigger bounce. If I go back to that 4-hour chart, when you have a ABC or equal measured move like this, you put your fibs over both swings, and if we do that here and look at where that 236 fib is, which would be like halfway back of this, of basically today's drop, 81,689. I think if we can regain and hold above 81,689, which will also be this low, then we should see a bigger bounce and potentially a bigger ABC. Now, if we're going to do that bigger ABC and we measure from the low here, last day of February, wrong tool, if I measure from here and we get above that 81,869 level, our first target is going to be retest 88,000, and then the equal measured move, because this is a swing failure, would be a retest of the highs at 94,300. So it's not, you know, a sure thing that we're going all the way to new highs from here. This is just a really big deal decision level, and because of the sentiment and the way this is unfolding, we could see a bounce from here. If we were to get stuck back underneath this 79,285 level, or we can't regain that 81,869, then I think unfortunately we're still going to keep going lower. And one of the reasons for that is, if I zoom out here, I'm just going to find these big, there we go. This is a big fib retrace level from all-time lows in Bitcoin, and you can see that I've started from 0, because this is a kind of mathematical created from 0 asset, and the low in Bitcoin was 0, and you can see that we have dropped underneath a big deal 236 fib level, which for me, you know, is my touchstone, and so that I would really like to see that regained. You can see last month we looked underneath this level and we closed back above it. Here we are in March looking underneath it again, because this is a monthly candlestick. I'm not going to read too much into it unless we close, you know, the month back underneath it, and then I do think we look lower from here to 66, and potentially, you know, that would say to me that we have, from this low in December 2022, completed these 5 waves up, and we are likely, I'm afraid, I think, come back to 55,000, which would be 50% all-time highs to lows, and it would be back to the bottom of this wave 4. I'm not, again, predicting that at the moment, because we are just, you know, just like this swing, this is a very normal correction for Bitcoin. So if somebody said, well, if I think I can count 5 waves up from here, does it mean we're done? Actually, it doesn't, you know. And one thing about crypto assets, they can really expand on the upside, and so potentially what we have done from this 2024 low is just wave 1 of 5. This is a normal pullback for a wave 2, and then the next wave would be the strongest and take us to new highs. And a few things I think could happen to drive that. Money printing, a recession might be a drag. One thing that there's an awful lot of chatter about, and that is that the Fed may, and the government, US government, may revalue gold and revalue their gold assets just to get the debt down. And that would send, you know, gold much higher potentially. And I'm not sure that wouldn't have quite a bullish effect for Bitcoin. I'm wondering. So as you can see, you know, this sort of 79, 80,000 is a really big deal. Getting stuck underneath 80,000 says we're still going lower, unfortunately, but at the moment we've just got this potential for a little bit of a double bottom here, and I'm watching to see if we can regain these levels. And this back test of this 236 fib level, which was the swing high at the start of today, basically, that was, we got underneath this level. I was kind of quite optimistic when I saw this morning, because it looked like an inverted head and shoulders pattern, and I thought if we could get above and recover this level, it would all look good. But in fact, we just made a three-wave back correction back, and this level became resistance. So this, if we are going to recover for another big swing higher in Bitcoin, this is really the level that we need to regain. And if it stays as resistance and we continue lower, unfortunately, not the bullish recovery we look for, and we look for lower. We can, you know, if we go back to Thursday, we can count 5 waves down. We really should at some point come back and retest this 83,500 level. That's what I'm looking for. And so really what happens here will tell us if we are going to see a bigger bounce in crypto or not. You know, realistically, it's felt very unpleasant to get down here, but you know, when I look at this and I look at this, you know, this 83,400 is also our daily 200 moving average. If we could recover that, you know, quite often if you are trying to build a bottom, if we go back to last August, you can see when we got underneath this daily 200 moving average, we really did have quite a fight to get back above it. But once we did, that was it, we were off. And so I'm not expecting to be able to smash through it first time, but holding back above it would be a really good bullish sign for Bitcoin. And we're getting pretty close this week, I think, to the sentiment being good enough for that to happen. So if we can't do it at the beginning of the week, then let's see if that eclipse can turn things around. So let's talk about Solana and ETH. So Solana really the worst performing of the big cap stocks. This is another one where I've drawn my fib retrace levels in Solana from 0 rather than this swing low in December 2022. And the reason I did that, I always test, you know, and I look on lower time frames, and I want to see this 236 fib hold and these fib levels hold. And if I haven't, I kind of adjust it, and you know, especially this 236 fib, the first time you touch it, it's a really good kind of touchstone. So I'm leaving it at this lower level at the moment because it's more conservative. If I move this here, we could argue, we are at this 61.8, but we haven't quite tagged this low here. And if I put it back to that 0, which you can do quite easily, yeah, I'm going to leave it there and say there is room for Solana to continue a little bit lower to 112. Now, if we were to do this here, then this previous, you know, these previous wave 4s, if we count 5 up in this one from this 22 low, so 1, 2, 3, 4, 5, we had really nice 5 waves for this 5th wave to finish. This would be a really good place for it to bounce, a very common place for it to bounce. So potentially a little bit lower, either here or that 112 level in Solana. Sometimes with 61.8 fibs, they can be a little bit messy, so we could have a little bit of a look underneath. But when we get here, I'm thinking that we see a little bit of a bounce in Solana. And again, I'm expecting it to unfold in 3 waves. And when you bounce from a 61.8 fib, you'll have a pivot level here, the back test in the middle at the 50% level at 147.50. And if you get above 147.50, you're looking for that 38.2, which would be 182. So that's what this is how I'm expecting it to unfold. And I don't think, when I look at this really horrific drop that we've had from the highs in January in Solana, it doesn't look to me like a big 3-wave correction. And when you have a big 3-wave correction, you want to see the middle wave, or at least to unfold in 3 waves in the middle wave. Now, I suppose we could argue that this did, but it just, I think it's more likely because we've fallen so fast that we were likely to build a bigger pattern in here. And if we bounce from this 61.8 and we made this pattern, it would be a bullish Gartley pattern, which is a trend continuation pattern. So we could also, we could take all these lines off and we could take all of our moving averages off and say, at some point when we get to this previous swing low, the most likely thing we are happy to see here is a bounce back to test these moving averages, which again puts us back towards this 182, 184, 180 area. And so a bounce, that's where we are likely to come back to and back test before we do another swing lower. So that's kind of seeing how I'm seeing Solana unfold at the moment. And I think in this zone, pretty good support and resistance zone, not just back here in 2024, but if we go all the way back here to 2021 when this launched, we can see clearly that this is a very interesting support and resistance level where we are now in Solana on between here and 112. So watching for a reversal this, and if you've been on the short side, watch out for that reversal. And if you're on the short side in ETH particularly, watch out for these levels, because I think that bear market rallies can be really fierce. So let's take a look at Ethereum and where we are. And this is one of those that really has underperformed. In 2024, we really didn't make new highs in ETH, thanks to these massive institutional short positions. So we double topped here in March and December in ETH. And we kind of made a marginal new high here. And it feels like we're making a bigger kind of three-way flat correction in ETH. And when you do that very often, especially if you make a marginal new high, you look for a marginal new low, and then you can say this bigger correction is over. When I look at this big picture, I see this as kind of a first swing and a big three-wave correction, and then I'm looking for another leg higher in ETH. So when I'm drawing this, there's a number of ways you can do this, where you can say from this high to this low, and we look at our fib patterns. We double top to the 786 fib. When you do that, your first target is this 38.2, which we tested twice, somewhere underneath it, and the second target comes down here. But quite often these fib retrace levels mirror each other. They keep repeating, and so we could very easily see a 786 fib retrace going the other way. And if we look at the fib levels from this low, from these lows to highs here, you can see these levels worked okay. Certainly the 61.8 worked. We worked very hard in ETH and just lost really that level today. You can see that we had a very decent attempt at a bounce from it. Here we are underneath it. So in terms of fib support and resistance levels, I think 1.6 is likely, unless we can recover this big round number 2000 in ETH. I think 1.6 and this 786 is where we are likely to head back to next, and that's what I'm going to be looking for. So not quite at a important support level, unfortunately, yet in ETH. Certainly I keep looking at lower time frames and the patterns, and this, unlike other markets, is not just testing these previous lows. Really we have broken them today. Now there is a possibility, because of this extreme short positioning in ETH, that we get a really extreme move. And if we were to do that, so what would be like a false overshoot here? Well, if we were to come back to this 61.8 and do something like this, make an inverted head and shoulders pattern, that's the pattern that you normally see when a market overshoots a level. And if we were to do that, I would say this would be a good place to buy it, because that's when I think ETH might rip some faces off. But for now, unfortunately, as long as we stay underneath that 2000, 2100 level, path of least resistance, unfortunately, is still lower for ETH. Okay, the next one we are going to take a look at is Ripple, which has been a bit of a pain trade, but not quite as bad as some of Elon Musk stuff. So the question I got today was, is this a head and shoulders pattern in Ripple? I think potentially it could be seen as it, but when head and shoulders patterns fail, it's usually because we have seen an ABC equal measured move. So if we were to do that here, just measure it roughly from this high to low, and this is just an equal measured move, we are likely to lose this 50% level in the middle here, where we bounce from and come back down to this 61.8 and back down to the weekly 50 moving average. So if you could sell, you could sell a breakdown here as a head and shoulders pattern, and your head and shoulders pattern target obviously would be all the way down here at 0.46. But I would have that 1.47 as a kind of intermediate level, because if it's not a head and shoulders pattern, and it's certainly not the most balanced head and shoulders pattern, this right shoulder is much bigger, that would be my first target, ABC measured move target in Ripple. Interestingly, because we've double topped, right, so if we measure this swing lower and here, this 61.8 would be a very common pattern here if we were to do that. So for now, we are potentially, we could argue that we are, it certainly wouldn't be a head and shoulders if this is the first swing. So if we've got ABC or a big, which ended up, so 3 waves correction here. So this is 1, 2, 3, and we've gone 1, 2, 3, and we're going to do another swing lower, which markets tend to do, with these ABC choppy overlapping corrections. I wouldn't be surprised to see an attempt at another swing higher from here. But if we continue lower, and especially, if we look left, let's zoom out to the weekly. This is a really important support and resistance level with this highs from the 2021. And if we look every time, basically, since we got here at the beginning of December, every dip into this zone here around 1.8 and 1.9 has been bought. So it wouldn't be crazy for it to hold the support first time back. But if you are on the short, I think short side in this one is favoured, especially if we stay underneath 2.2, which is what we've back tested over this weekend, and it becomes a bit of an important support and resistance level. Underneath 2.21, I think we're going to retest 1.84, and the measured move target, if we continue lower, is 1.47. It could end up being a head and shoulders pattern, I'm not going to lie, but I'm going to go with the more conservative target in this one. I think a lot of this is driven by the disappointment of the, crypto strategic, the reserve, strategic reserve, not including any of the altcoins that they mentioned in the Truth Social post. I said before, I really do think that Truth Social is run by his kids who are pumping their crypto bags, not by necessarily Donald Trump. And certainly when I watched him speak at that crypto convention, I just wondered what the hell. It was such a dog and pony show. Like, he was literally reading out off a script. He didn't look at all interested or excited in what he was talking about, and pretty much everything that was said there was, announced the night before. So I kind of felt like, what is the point? It was just acting for show. So I can see why the market is disappointed. As you can hear, my voice is still rubbish. I apologise. Hopefully it'll start to get better soon. Okay, so Ripple and Solana, unfortunately, potentially pretty bearish patterns. Now here, if we see a Ripple bounce in Ripple from this really important support zone, I don't think that the low is in necessarily, and I think that we are in a sell rally environment, and potentially we continue to 1.47. That would be the equal measured move level. But quite often when you make these 3-wave moves, this third swing is 61.8 of the first swing, and if we measure that from the high here in Ripple, we're a little bit sideways at this 61.8 level. That is where it is at 2. So stranger things have happened. This is, this 2.02 is the support and resistance level. Let's draw it in. And that really, if you wanted to have a horizontal level for the neckline for this pattern, 2.02 in Ripple is it. Holding underneath 2.02 level for me is likely to continue, unfortunately, to 1.47, and then we are going to have a proper shakeout. And then, yeah, if that lines up with the eclipse at the end of the week, I don't think this is a bad bounce by at all. So I'll be watching out for that one. Okay, I've got a few requests. Here's CRV. So this one, so much excitement in November after the election. The problem with this one, let's go to the monthly chart in CRV. I know I say this a lot, but that 236 fib level is what killed us, unfortunately. Couldn't get even close to it. So we can say, you know, we have not reversed the downtrend in CRV, even though we had what looked like a really strong impulsive move. We took out this swing high here. I thought this is looking really good, but we got up to that monthly 50 moving average in this previous swing high and we couldn't. So now we're looking for this to build a bigger base. To be honest, this is one of those levels when we look left where we could find some pretty decent support. I've drawn support from these lows and highs here, but really we could extend this and say if we were going to make a bigger inverted head and shoulders pattern long-term bottom here as we retest these lows, this is one of those levels where it could have a go. So we need to watch the price section. When I look on the weekly, when you look at what some markets have done today, this really hasn't done very much in terms of a daily candlestick. We've had a new lows, but monthly, daily kind of doji, nothing much, you know, nothing much going on until we start to reverse this trend though in CRV. Although I think we're in the zone of where we should start to find support, I don't really see any sign yet that we have done that. But this is those one, if we've had an accidental broken down too far in this one, then I would expect to see one of those inverted head and shoulders pattern here. And the key that we're going to be getting higher is going to be taking out today's highs from early this morning. That would be a bullish signal, and you know, we might do this. Why? Because we can count 5 waves down from this high that we made on Friday over the weekend, and if we take out this wave 4, then yeah, we're likely to see a bigger bounce from here. And if we don't, I'm afraid that 0.4 level, if we are going to continue lower after bounce, this 0.4 level unfortunately is going to be resistance. So in an area where we might see a bounce and an attempt at a bottom, but not the price action to support it yet in CRV. Okay, a couple more requests. Let's take a look. The first one is Len. So if we take a look at this one. Oh wait, I'm thinking that's not the one you are asking for. So I'm going to do these ones separately, Len and TPL. I will do them for you, Saeed, don't worry. So that's where we are for big picture for crypto tonight. You know, there are a lot of stuff that we're just retesting these previous lows, stuff that's been really beat numbers. You know, there's a little meme coin I like to trade, BERT. If we look at this on the daily, you can see this is just retesting these previous lows. So just like those simple rules that I looked at and everything else, if we're going to make a new high from here, we need to take out this 236 fib, and then I'll buy pullbacks for a bigger bounce. We did it here when we were looking at it, you know, and these make really nice moves, these little ones, but you don't want to put too much risk on. So that's where we are with crypto tonight. Although the sentiment feels really ugly, I think it could mark some capitulation this week, in which case we should get some opportunities. And yeah, you know, when they happen, bear market rallies can be really fierce. They can make you feel like it's all over. Be careful, don't get your face ripped off. So okay.